Good evening, everyone. Welcome to the channel. Before I begin, here are my disclaimers. Today I am going to give you an update about China Qidian Guofeng Holdings Limited annual report. China Qidian Guofeng Holdings Limited is a diversified investment holding company that operates through various business segments. At its core, the company engages in the retail of household appliances, mobile phones, computers, and imported and general merchandise in China. The company's operations can be broadly categorized into three main segments: household appliance business, liquor business, and education business. In addition to these core businesses, the company also provides various supporting services such as maintenance and installation for household appliances, education-related training, and logistics and warehouse management. Furthermore, the company is involved in trading liquor business, bulk distribution of Midea air conditioners, and operates a chain of retail stores selling household appliances and general merchandise. The company has also expanded its reach by selling products online, making it a multi-channel retailer. Overall, China Qidian Guofeng Holdings Limited's business scope encompasses a wide range of activities, from retail to logistics and education services, positioning the company as a comprehensive player in the Chinese market. China Qidian Guofeng Holdings Limited market capitalization of 4 billion is significantly larger than the average industry peer of roughly 0 billion. This shows that China Qidian Guofeng Holdings Limited holds a significant advantage in their industry. China Qidian Guofeng Holdings Limited trades at a higher price-to-book ratio of 18.64 times relative within the industry. While the stock does not screen as absolutely cheap, mixed valuation signals relative to industry peers prevent a definitive conclusion. With the broader industry trading at lower valuation levels, this may reflect transitional pricing dynamics rather than clear mispricing, warranting further analysis of earnings quality, growth sustainability, and balance sheet strength. The leverage on the balance sheet appears elevated, with liabilities of 65% of total assets. This raises some concern, and we should examine the industry and nature of the business to determine whether they justify the elevated leverage. Average liabilities have declined over the past 5 years, indicating improving balance sheet discipline and reduced financial risk. The share count has increased over the past 5 years, while revenue has continued to grow. This suggests the business may rely on shareholder dilution to fund expansion. Investors should closely monitor whether growth can eventually be sustained without dilution. The income statement shows that the company have been growing its revenue annually, but the operating income have not been increasing. This shows that the business is under pressure with rising cost. The primary drivers of revenue growth or decline are multifaceted and varied across different sectors. On one hand, the household appliances sales have seen a significant decline, with a decrease of 34.7% to 35%. Similarly, the liquor business has also experienced a downturn, with a drop in revenue of 41.3% to 41%. Furthermore, the provision of education-related training services has declined by as much as 67,908. On the other hand, there are sectors that have shown remarkable growth. The introduction of livestock e-commerce commission income has emerged as a new and lucrative revenue stream in 2025. Additionally, the household appliance business has seen an increase in revenue, rising from plus 236,098 to plus 271,790. The liquor business too has experienced growth, with an increase in revenue from plus 60,011 to plus 102,296. These contrasting trends highlight the complexities of revenue growth and decline. While some sectors are struggling, others are thriving, indicating a need for strategic adjustments to optimize revenue streams. The company's operating cash flow status has been inconsistent and unclear in some instances. However, two specific points provide clarity on this matter. On page 26, it is explicitly stated that the company's operating cash flow is positive. Furthermore, on page 30, it is confirmed that the company is indeed generating positive operating cash flow. These statements collectively indicate a consistent trend of positive operating cash flow for the company. The company's financial performance reveals a mixed picture across various segments and regions. In terms of underperformance, the education business stands out as a concern. On page 16, it reported revenue of RMB 57,394, with segment results showing a significant loss of RMB 313,015. This trend continued on page 17, where revenue was RMB 67,908, but segment results showed an even larger loss of RMB 2,201,326. The company's livestream e-commerce business also experienced difficulties, with significant impairment losses on goodwill and property, plant, and equipment totaling RMB 307,220. These losses indicate a struggle to maintain profitability in this sector. In contrast, the household appliance business and liquor business do not appear to have performed poorly based on the available information. There are valid concerns regarding inventory buildup and supply chain disruptions in various industries. A closer examination of the home appliances industry reveals a contradictory situation where weak terminal demand has led to inventory depletion, suggesting a potential shortage rather than excess stock. However, the overall context suggests that there are indeed concerns about inventory buildup, indicating a complex issue at play. The coexistence of these two seemingly opposing trends highlights the intricacies of supply chain management and inventory control. While some industries may be struggling with depleted stocks due to weak demand, others may be grappling with excess inventory levels, leading to concerns about supply chain disruptions. This dichotomy underscores the need for careful analysis and strategic planning to mitigate potential risks and ensure smooth operations. That concludes the financial summary for China Qidian Guofeng Holdings Limited. Feel free to comment below, and I will be happy to answer them when possible.